The economy in Great Britain is weakening. Current figures from the ONS Statistics Agency show that the economy contracted in the third quarter. The futures markets are now increasingly betting on interest rate cuts from the Bank of England. So the British economy has one foot in recession already. Gross domestic product shrank by 0.1% from July to September compared to the previous quarter, as the ONS Statistics Office announced on Friday. An earlier estimate had shown stagnation. If the second minus in a row follows in the final quarter, it is referred to as a technical recession. A look at the spring also shows how weak the British economy is this year. According to the now revised data, it merely stagnated from April to June after growth of 0.2% was previously reported. The medium-term outlook for the British economy is far more optimistic than these figures suggest. That at least says Chancellor of the Exchequer Finance Minister Jeremy Hunt in an initial reaction. He's betting that the British Central Bank will lower its interest rates and thus provide new momentum. If we can stay on course and bring inflation down, there is a possibility that the Bank of England will decide to push interest rates down. That's what he told the Financial Times. Usually, when a country's output is growing, the value of the goods and services it's producing, known as its gross domestic product or GDP, goes up. But during an economic downturn, this value falls. A recession is a period of negative economic growth for 2 consecutive quarters. It is when GDP drops for 2 3-month periods in a row and comes as a sign that the economy is weakening. It will not be clear until February whether the UK has entered or avoided recession when figures are released for the October to December quarter. There have been concerns over the UK's weak economic growth for some time, but the country has managed to avoid a recession so far. While there's uncertainty about what 2024 will bring, Ashley Webb, the UK economist at Capital Economics, said that the bigger picture was that economists expected economic growth to remain subdued throughout 2024. Growth is weakening and interest rates are really beginning to bite, and while a recession has just been avoided to date, there is no guarantee one will be avoided in 2024. Richard Carter, the head of the fixed interest research at Kilter Cheviot, said that. Inflation has eased more than anticipated, and interest rates predictions are suggesting more easing than originally thought in 2024, but the damage may already have been done, he said. Economic downturns, such as recessions, generally reduce economic opportunities, meaning failed businesses, fewer jobs, and in the end lower wages. As a result, UK households might have difficulty paying bills or saving money, and this may push many into debt to make the necessary payments. Graduates and school leavers may find it harder to get their first jobs as companies cut back on hiring and, of course, on spending. Along with the erosion of house values, recessions tend to be associated with turmoil in financial markets, so it's good to reassess investments. However, inflation in Great Britain is falling more than expected anyway, and this fuels interest rate cut fantasies for investors in the first half of the next year. The British inflation rate fell noticeably to 3.9% in November after 4.6% in October, as the ONS Statistics Office also announced in London, this time on Wednesday. Price developments in the transport sector and fuels in particular contributed to the inflation rate falling to its lowest level since September 2021. Economists surveyed by Reuters had only expected a decline to 4.4%. And even if the central bank's inflation target of 2% is still far from being reached, bets on interest rate cuts are increasing. An easing step is now firmly expected on the futures markets in May. Overall, interest rates could fall by more than 1.35 percentage points over the next year. The Bank of England recently left the key monetary policy rate at 5.25%. And after 14 interest rate hikes in a row, the members of the Monetary Policy Committee kept their feet still for the first time in September and also paused in November. And BOE boss Andrew Bailey had emphasized that the tight line in combating inflation was having an effect. But it is still too early to speculate about interest rate cuts. The pound fell against the dollar following surprisingly low inflation data, and British government bond yields fell significantly. And Chancellor of the Exchequer Jeremy Hunt believes the central bank has not yet reached its goal, despite price pressure easing more than expected. There is still a way to go. Inflation never falls in a straight line. That's what the conservative politician told the press. We continue to assume that overall inflation will return to 2% in the first quarter of 2025. British Prime Minister Rishi Sunak, who faces an election in 2024, has made halving inflation in 2023 his top priority and is expected to achieve that goal. So-called core inflation, which excludes energy and food prices, also fell more than expected on the island in November, to an annual rate of 5.1% after 5.7% in October. And the inflation rate in the services sector, which the BOE pays particular attention to as a measure of domestic inflation, fell to 6.3% from 6.6% in the previous month. And if you want to see more, the next video is right here in the end screen. I'll see you there. I'll be back.